Good evening, everyone. My name is Jamal Solomon. I would like to welcome everyone into Keep It in the Family series, where we're going to talk about protecting your assets. I got to give props to Melba, speaker today, because one day we had a conversation about a name, and she said, keep it in the family. And I told her I was going to steal it, and I kept my word and I stole it. So keep it in the family. That's what our series is about. And it's all about protecting and growing your assets. And I had somebody ask me a question not too long ago, Wednesday, and they asked me and said, you know what are you really trying to get out of this workshop series? Is it just trying to get followers? Oh, everybody mute. Are you just trying to get followers, anything like that? And it's not really about followers with me. It's not trying to be popular. Anybody that knows me know I don't try to make myself be the smartest guy in the room or anything like that. But personally speaking, I learned late in life that my grandmother owned multiple properties in Brooklyn. Anybody in New York knows if you have any type of property in Brooklyn right now, it's probably at minimum 800K, $1 million. And what happened when she died, something shady happened with the person, with the lawyer, stuff like that. And she lost multiple properties and we only kept one house. And you may think like, oh, that's something rare, but it's very common, especially within our communities, that maybe we might have property that might appreciate in value, but we didn't do the right things to keep it. We didn't do the right things to maintain it or keep it. And just imagine, in a general situation, how different our family lives would be if we had those multiple properties. We still blessed that we do have that one property, but four or five properties in Brooklyn are definitely different than one. So what we're trying to do right now, we're just trying to give people the basics of what they need to know if you're really serious about getting assets, maintaining assets. And sometimes life happens, you got to know how to keep it. So that's why we're going to have this first session is going to be about real estate taxes. Next week is going to be about, no, not real estate taxes, real estate in general. Next week is going to be about taxes. And the last week in January is going to be about insurance, because those are the main things that people don't want to talk about. But if you're really serious about keeping your assets, if you don't know those three things, you're really doing yourself, your family, and your community a disservice, right? So it's going to be a lot of real talk, but at the end of the day, we're doing this out of love, or the presenters or the sponsors or the speakers, we're doing this out of love. All right. Now, how come this is not going down? First, I want to thank the sponsors. First, we want to thank the Queens Alumni Chapter, Kappa Alpha Psi Fraternity Incorporated, great brothers that do a lot of great things in our community. I highly recommend, even if you're not in the Greek world, definitely check their website, their IG, their Facebook. If there's any ways that you can help them in one of their community initiatives, or contribute, or maybe attend one of the events, definitely look into these brothers. They're doing a lot of great things in the borough of Queens and beyond. I know personally that they had a very positive impact in my life. I am a Kappa, also a Nuke too, and so I love this chapter. And just like one of the things, they're giving back. This is just one of their ways to give back. So we definitely want to thank the brothers of Queens Alumni Chapter, Kappa Alpha Psi Fraternity Incorporated. The next sponsor is, whoa, look at that. It's my company. My company is JS Tax Corporation. We are a virtual tax company, meaning that I have clients from all over the country, even a different out of the country too. And so we could accept clients from all over. We could do any type of bookkeeping, taxes, whatever the case may want to be. Check out our website, our IG, always giving up information. And I'm going to be the guest speaker for next week. And final sponsor, Boyd Agency. Boyd Agency is a great insurance agency located in Queens Village, that's in Queens, New York. The guest speaker, the owner of the agency, is Garland Boyd. He's going to be this guest speaker in 2 weeks. You'll want to attend that session. He has over 30 years of experience. I don't think you understand how valuable speaking to someone that has over 30 years of experience in insurance is. And especially when I'm learning our community, we kind of disregard the importance of insurance. But what he's going to do, he's going to break it down to us, and we're going to make it happen, guys. So thank you, Garland. Thank you, Boyd Agency. Now let's get to our wonderful speakers. Melba Martinez. She wanted to definitely subscribe to her Facebook page. because on a weekly basis, it's not daily basis, she gives up a lot of great information. So if you're serious about keeping your real estate, or maybe I'm thinking about buying or selling, she is the person, right? And also, and listen, anybody that attends this, I'm going to give them the contact information. I'm going to be on the chat. So it's not going to be any type of excuse to say, oh, I don't have that information. Do you have the information? I'm going to put in the chat. I'm going to email the participants, and you're going to want to talk to after this. I guarantee it. The other presenter is Geoff Gross. Great guy that works in a great organization that I believe is his sister. Have very high words for his sister. So if his sister here or anybody in the company's here, I'm highly impressed on how he talk about y'all, and I believe that everybody's going to learn a lot from him, and it's going to be a great thing. So guys, what I want to do right now, I want to have the two presenters introduce themselves. And Melba, ladies first.
Thank you, and thank you for this opportunity and for the credit on the title. No. I appreciate it. So my name is Melba Martinez. I'm a licensed real estate associate broker. I've been licensed for 16 years, servicing Brooklyn, Queens, and areas of Nassau, Long Island. I always tell people I kind of travel through the Belt Parkway into the southern state. So any of those towns and those areas is where I pretty much help people either purchase a home, or if they're looking to transition or looking to downsize, I'm also in that space as well. My background is also when I took a little bit of a hiatus in regards to full-time licensing and selling homes, I also worked in community development work. I worked in Central Brooklyn for a nonprofit where I was their program director, and I designed programs for first-time home buyers, homeowners who are facing foreclosure. I saved over 100 to 200 under my leadership. Homeowners in the Bedford-Stuyvesant and Central Brooklyn community saved their homes, especially during the time when President Obama was in office, and we did home affordable programs. So we had to do loan modifications, as well as some transactions and deed thefts. Additionally, I also worked for the City of New York, HPD, along with a nonprofit organization where I helped homeowners, well, actually first-time home buyers who are looking to purchase homes, but below market value. One example would be I sold a home in Bedford-Stuyvesant, a new construction duplex, corner property, it was an owner's duplex with a rental unit for $407,000 just in 2020. And the house is worth over $1 million. So these are the types of programs that I worked in and am familiar with when someone is looking to either sell their home or purchase a home. I've done a lot of the transactions from the beginning of the transaction all the way to the end. And additionally, I am also a property owner. I own property here in Queens. I've been a property owner for now over 20 years, loving, and I call myself the tenant whisperer. You know, I've been a property, I love property management, but it is a business. It's not necessarily just, you know, a hobby. It's not people may sell it to you as additional income, but it comes with responsibilities. And so in interfacing with a lot of homeowners who are facing foreclosure, their mindsets was not set on that. And lastly, but most importantly, in this particular environment, I'm a woman of Alpha Kappa Alpha Sorority Incorporated. Just want to put that out there, but
talk your talk. I ain't mad at you.
A member of Theta Iota Omega, made at Hofstra University back in many years ago. And I'm looking forward to the conversation. This is a conversation that Geoff and I will have with everyone. And you know, feel free to ask questions and we'll be here to help you out. Thank you.
I don't know why you're scared to say you crush. I'm way after you. I'm the baby of the crew. But anyway, Geoff, can you introduce yourself, bro?
Good evening, everyone. My name is Geoff Gross. I am the office manager for New York Estate Group Realty. I come with a pretty extensive background in a few different areas. I used to be a financial advisor for 13 years with IFMG Securities, worked in the bank market, transitioned into being a mortgage consultant during the height of the mortgage decline from 2006 to 2008. Organically, I came into the business as a realtor and working with my sister-in-law, Andrea Gross. She and I used to do closings together. And I transitioned into the business and started working with her 12 years ago because I recognized there was an opportunity to work in a market where people that are in trouble, looking to help themselves get out of trouble in the foreclosure defense and prevention area. So I specialize in foreclosure defense by my partnership with the law office of Andrea Gross. And I can tell you that I've experienced the dream of a person buying their home, being ecstatic, understanding and loving ownership. But I've also experienced the nightmare of a person being in a situation where they're about to lose their home. So I guess I come to the table with a little bit of different perspective in that. Yes, I'm a realtor. We do buy and sell properties. I do have a newsletter I publish every 2 weeks that's informational, that provides an opportunity to learn about home ownership, maintaining, buying, selling, you name it, we do it. I partnership with Outborn Engine, and it's through them that we publish this bi-weekly newsletter. I would encourage you to subscribe and take a look at it. You'll find it very informative. But to move the conversation forward, my colleague and I, we're here to talk about real estate. And at some point, I want to give you a little insight on the foreclosure market, what's happening in the industry. I can tell you that there's a foreclosure prevention abuse bill that's being legislated right now in the state. My office has been instrumental in promoting it. It's been a grassroots promotion, but we've also met with Mayor, he was Mayor-elect, but now Mayor Adams, he's aware of it. So I would encourage you to check with your local elected officials and ask them about the foreclosure abuse prevention bill that's out there. It's real. You may not be aware of it, but on Saturday, the moratorium on landlords being able to evict homeowners and renters is coming. The moratorium is expiring, so be mindful of that. And now we can open up the discussion for the event tonight.
By the way, I don't know if I'm the only one that noticed, but those pins on your jacket are fire. Kappa pins, man.
If I can digress for a minute, I'm a proud member of Kappa Alpha Psi fraternity. I am a 1983 initiate of the Phi chapter, single letter chapter, Northern Province. I am also the co-founding charter member of the Queens Alumni chapter, of which we are part of the host this evening. So I come to you and I welcome you, and I look forward to a very, very inspiring and spirited conversation with my colleague.
Nice. So thank you for the wonderful, and I see that they call you G Money. I see you, Pierre. So now we know what to call you. But I know we got some questions, but I want to start it off first by asking both of y'all, in regards to what y'all do, what does it mean and what you guys do on a day-to-day to gain assets and save it? Like, what does that mean to y'all when you're trying to preserve it and save it? Like, how does that look like in your line of work?
I'll defer to my colleague first.
So what it looks like to me, well, one of the things is education. I think is very important. I come from a background of educating people. So part of my background in the community development world was a homeownership counselor and foreclosure prevention counselor, where I had an opportunity to not only design programs for future home buyers and for existing homeowners, but I had the opportunity to work one-on-one with a lot of people. And so I think it's very important before someone jumps into either purchasing a home or as they think about in the maintenance of their property and keeping the home, is to be educated. So something like a forum like tonight is fantastic, but there's a lot of organizations that provide that one-to-one, but also those steps that you need to purchase and to preserve your home. So to me, the first step when I speak to someone is education. And one quick example would be when I first purchased my home about 20 something years ago. When I purchased my first home, and I left my mom's house to purchase my first home, I was approved for a loan. And I was like, great, I got approved for a home, and I was so excited, but I never paid attention to what that amount that I was approved for and what that mortgage amount would be on a monthly basis. Because I was too busy getting excited about getting approved. And so my first question when I ask people when they're looking to purchase a home is, what's your number? Because you may have been approved for $1 million, but you may not want $1 million mortgage, or you may not be able to afford $1 million mortgage. So it's always about education, but also knowing your base. So I hope I answered that question. And in regards to preservation, is just, it's your home, but I always say, like I said, it's a business, and you have to look at your product. How are you maintaining, especially if you're a landlord? Are you providing the services that your customers need to keep your home, right? But also keep your business running. That was it. Jeff?
To add what my esteemed colleague just said, that's true. Education is essential. On a daily basis, we have people that come into our office, and it could be as simple as coming in for a notary, or it could be someone coming in about to lose their home, someone that's fallen behind. So what we serve as a resource, identifying exactly what that need is. Sometimes the need is expressed, sometimes it's not. We go through a process where we fill out an intake sheet. The questionnaire helps identify what that person is looking for and how we can best help. One of the advantages of working with an attorney and also being a realtor is that we network with a lot of different resources. We have mortgage lenders, we have insurance brokers, we have other attorneys, we have investors. So there's a whole gamut of people that we bring to the table. So when someone comes in our office, they're not alone. And one of the areas that we emphasize is that because this is protecting the assets and keeping it within family, we treat you like family. So no one we turn away. The door is already open. And that's it. Education, opportunity, developing a base on what's important to them, and utilizing the resources that we have within our office.
Nice. Fredleen, I see that you're very active in the chat, and I love your first question. Would you like to verbally say it and ask the speakers in regards to when is it a good time to buy property? If not, I could just read it. Okay, there you go.
No, I really didn't know, like, if you're past 40 or you're in your 50s, is there a time that you say, okay, no, because you're almost near retirement, you shouldn't even think about buying a home? Maybe your kids should, or you can help them to purchase it. Like, what would a plan look like?
If I may, I'll just chime in and say that real estate can be generational. So you're never too old to purchase property if you have the financial resources. You could be buying a property with a family member. You could be setting up your legacy. So it's never too late if you have the resources and the opportunity is there and you're able to buy it. Why not consider purchasing? As you know, in this country, buying a home is still one of the biggest decisions a person makes in their financial life. So once again, if we're talking about protecting your assets and building a legacy, there's never really a bad time if you have the resources available, in my opinion.
I wanted to add to that, and thank you, Jeff. My dad, who immigrated into the United States, was determined to purchase a home, and he purchased a home, all right. He purchased a home in his 70s. He wound up purchasing a home, which is a short sale, which is pretty much the below market value, this property. And so he was able to buy this home. And I was, surprised, because it's like, okay, 30-year mortgage, 70. But it just goes to say that you can buy a home at any time, right? And so it's never too late. And as you get older and you have more resources, something that Jeff said is it can be generational, right? I know a lot of folks who buy multifamily homes and there's a generation on each floor. So it's possibilities. Never stop dreaming about buying a home.
Thank you.
AKA shoot your shot. Don't be scared to shoot your shot, but shoot it, cautiously. Get the right people to tell you the real story. Don't let nobody, shoot your dream. If you're trying to get that $1 million house, but you really got a $200K budget, you may want to hold off on it. Like I told Melba, I have the dream of having the ultimate Kappa man cave. And she said, right now, might not be in my budget. You need somebody like that on your side to be like, you know what? You're not a quick commission. I really want you and your family to keep the property and do generational wealth. Have the right people on your side. Pierre, you had a great question about the LLCs. Would you like to verbally say it?
Of course, Lou.
Okay.
My question is, what's the advantages and disadvantages of instituting a LLC between co-owners of a property versus keeping it in the owner's name?
Well, my office does a lot of corporate planning. We actually establish corporations and from time to time LLCs. There's an advantage of keeping it in the family. I don't know if an LLC always is the best opportunity. It might be better served for a corporation. It depends upon your goal. If you're attempting to keep it within the family to shelter yourself against creditors, making it in the LLC might be a good option. But it depends. Every situation is different. But that is an option that you can use in owning property, having an LLC. Many of our investors, when they buy properties, they establish a corporation to purchase the property, but they don't keep the corporation after they sell it. It's simply a tool that's used to purchase the property where it's not in the person's individual name.
Cool. Thank you.
Leave that to Jeff. He covered it.
He got it. He got it. I like
Got
that.
it.
Teamwork with the dream work. Is something that you want to say? No?
No.
All right, Tina. I know you're super active. Pick one question, not your 10 questions. Tina, would you like to verbally ask your question?
Yes.
There you
So
go.
I'm planning to move to Florida at the end of the year, but I'll own my home in New Jersey in about 4 years. Want to know how to navigate that if I don't want to sell. And I guess it ties into becoming a landlord, or how do I prepare that process? And I don't know if that's for Melba or anybody else.
I'll defer to my colleague for that.
You sound like an attorney.
I know. I'm like, okay. Well, one of the things, yes, purchasing a home out of state is
No,
just-
not purchasing.
you're
I'm
purchasing.
gonna rent. Yeah, I'm gonna.
You're gonna rent out of state, but you're gonna have your home in New Jersey. Correct. It's management company, right? To me, that'd be the easiest, right? Putting in, when you do your expenses, and what we say is when you purchase the home and you find out, okay, how much is gonna cost me to purchase the home? How much money is, my monthly mortgage? What's the rental income? What are the operating expenses? What's the maintenance to maintain that home? You wanna put in, on average, is between 4 to 10% of a property manager to maintain the property, right? Sometimes that's why people get afraid. They're like, I don't want to purchase out of state because I don't know anybody out of state. I'm not gonna, or they'll purchase something really close where they can drive to. But don't be afraid. If the properties, especially outside of New York or even the tri-state area, is less expensive, then just defer to a property management company. I always just say, you do your occasional drive-bys and pop-ups and things so you can know what's going on with the property. Because no matter who you hire, it's not their property, it's your property. So their sense of urgency is going to be different than yours.
Right.
But at the end of the day, you can always hire somebody to manage that. Just making sure that when you're looking at that purchase of that property and you do all your numbers, that it makes sense to have a property management company to cover, to help you, and that you will still continue to have a profit. Usually, depending on when the amount that you spend, or if you're buying cash, if you're doing mortgage, you have to determine what your ROI, right? Your return on investment is going to be.
Mhm.
And then, you may make a lot of money the first year, you may make a little bit because you're just establishing yourself and getting familiar with things with the property. But then, we do projections, maybe 5 years from now, I'll make my money back, whatever the case may be. But hire a professional to help you if you don't feel comfortable doing it yourself, especially since it's out of state.
Okay, thank you.
Nice. I don't know if this person's hiding for the cops, but if you are, I did make a disclaimer that nobody snitches in here. So B, I see you had a couple of great questions. Before you get to that disclaimer, before you verbally say it, you had a question about buying in crypto. One of my a million aliases is Crypto J, and that's really a tax question because I'm not going to get too heavy into it, but the moment you buy with crypto, you gotta look into the taxes associated with that. So I really want you to get into the buying in cash because crypto is a whole another story. Would you like to verbally ask them about your question about buying property in cash? B.
Yes, sure. Thank you. So I appreciate that. Yeah, so my question is, what is the downside basically to buying a property in cold hard cash versus buying with a loan, having a mortgage? I've heard from different realtors that it's actually a smarter thing to do to have that mortgage but I'm not fully grasping why that would be the case.
I'll just add really quickly that having a mortgage has tax advantages, where if you're purchasing a property with cash, I would tend to think you're an investor. And most investors don't use their own money. They use other people's money. They utilize the services of hard money lenders so they can leverage their investment. Buying a house outright with cash will give you a complete amount of equity, but it won't give you a lot of the tax benefits that a mortgage would allow you by making payments over time. So that's just in short my response, and I'll allow my colleague to contribute as well.
I was going to say I defer to my colleague, but I was waiting for that for that phrase. Honestly, I think Jeff covered it. At the end of the day, it's pretty much it's almost like using a credit card or using cash when you go out shopping, right? Most of the times you want to keep as much money as you can to yourself, right? So if you're someone who can buy, especially in New York, at minimum $500,000 house, fantastic. But at the end of the day, you can use that same $500,000 and buy multiple homes, right? Because now you have that cash to move things around. But similar to what Jeff said, a lot of real estate investors do not use their cash. They say they're cash buyers, but they use hard money lenders, which come with a higher interest, and that becomes a whole nother conversation other than for today. But just in the short, just think about what you can do with the money versus having to get a mortgage and just use a portion of that money to purchase that home.
Thank you both.
All right, so I'm learning a lot from especially 80s noops, noops that was made in the 80s. And I see in the chat that Garland put a major plug in, but I'm gonna do my plug before him. Anyway, when Jeff said about the taxes, when they changed those laws during the Trump years, a lot of people, especially if they live in New York, even if they had mortgages, they wasn't really able to itemize because they changed they didn't really change it. They just like rearranged a lot of stuff. So sometimes when people say the tax advantages, have a conversation with your lawyer. I mean, not your lawyer, your tax accountant, which we're going to talk about next week on the 20th. But because a lot has changed. If this was like 5-10 years ago, then it will make a lot more sense. It's a no-brainer with the tax advantages. But now that they changed everything and we don't know when it's going to go back, now you got to really think about it in your unique tax situation. You can't compare your tax situation to someone else. But also what Boyd said, he made a great point, even though he's sharing too much. He's supposed to say this in the 27th. He said, make sure you speak with your insurance agent when the home you own becomes a rental property. You must convert your homeowner policy into a landlord package policy. Plug for January 27th. I mean, that's a freaking mouthful, but that's what I'm saying. You need to register to his session because I work in the same office with him, so I know the knowledge that he has is just, it makes no sense. So you can't disregard insurance. All right. Let me get to the next question. You're kind of shy, so let me see if I have someone else.
Jeremiah has his hand up.
All right, Jeremiah, you got the floor.
Hi, hello, can you hear me?
Yep.
Yes.
Hi, so I'm kind of new to the whole real estate game and I'm kind of learning a lot from everywhere I can take. So I just have a question. Since I'm new and I don't kind of have my first property, I'm looking to do a house hack with a multifamily home. but I heard about long distance real estate investing. So that's kind of where I'm kind of lost, because I know about FHA and like owner occupied loans, but my question is, if I was to per se go buy a house in Phoenix or another market, because New York is crazy right now. So if I was to go to another market to buy a house, would I still be able to do an FHA in New York, because it's an owner occupied loan and I can only live in a house that's close to my market, if that makes any sense? So
Just
I'm
real
wondering
quick,
which is the better route to do.
FHA means home ownership. You have to occupy the premises that you're taking out the loan for. So first and foremost, if you're doing that type of loan, you have to live in the property.
Yeah, I
So
know that.
you can't purchase a property outside of New York with the FHA loan if you're not living there.
Yeah, that makes sense. But my thing is, like, if I was to buy a house in West out in Texas or something, and it's a lot cheaper out there, and I buy that cash down payment or conventional, would I still be able to do my FHA after doing that conventional or cash down payment on the other house?
I would just say that you have to do your homework. You need to take on the responsibility of getting someone that's out of state, that's a mortgage rep, that can help you, guide you in that direction. Although we're talking about real estate, you're talking about outside of New York. You talk about buying a multiple dwelling. So you really have to do your homework much more than you're doing right now.
I did want to add to that, Jeremiah. You know, my first home was a house hack, which I didn't know back then. That's what they call it now, which is pretty much, for me, I purchased a multi-family home and lived in the basement. Basement's illegal, just want to share that. It's a disclaimer, but I lived, you know, I lived there and I was able to live pretty much, I didn't have to pay anything because the two other apartments were paying for the mortgage and all the expenses in the property. So one thing I wish to say is house hacking is definitely a good way to go if you want to get your foot in the door in real estate, and not necessarily, if you may not have the funds on a regular basis to manage that property. And then like Jeff said, you know, definitely defer to someone who is a lender who lends outside of New York and can share with you what that would look like in regards to lending agreements. I did want to disclose I had an old colleague who's also a Kappa, Edward Odom from Citibank. See, I told you, they didn't believe me, Edward, that you you were coming. No, but he worked in the lending field for a long time. And so just, you know, you want to defer to people who are in that space who can then give you some options. I feel like Jeremiah disappeared.
No, I'm still here.
Oh, you said, okay.
Yeah.
All right.
Thank you.
Yeah, Edward, I'm not gonna lie. We got on Melba about you. I'm not gonna lie, you know, because you know noobs are mean, and that's what we do. She wasn't explaining you correctly, so yeah, we got on you, bro. But anyway, Jerry, you said the right words. You said Brooklyn. I lived in Brooklyn my first 36 years of life. Then I got married and she didn't want to live there no more. But that's a different story. I don't really like the new Brooklyn, but maybe I'll take my time next week. But I would like for you to ask your question verbally because I think it's a great question. Can you ask your question verbally?
I can. Good evening,
Okay.
everyone. So my question is, as gentrification is moving across Brooklyn, moving closer to the East New York, Brownsville area, if you own a home in that area, is it required for you to do remodeling for your home value to increase, to match up within the gentrification range? And if that is the case, once you've done the remodeling, how do you facilitate increasing the rent for your current tenants?
Jeff, you want to start? Or you want?
I'll start with where Brooklyn at. Where Brooklyn at? I'm from Brooklyn. I live in Brooklyn. I'm gonna tell you all about Brooklyn. You talk about gentrification and moving into the areas such as Brownsville, East New York, it's happening. Trust me, it's happening.
It happened.
It's continuing to happen. Every day, someone is trying to call someone else to buy their home and offering them unsurmountable amounts of cash that aren't realistic. But in terms of improving your home situation, well, you know what? If you're in the market to sell your house, there's an area that we call staging. Staging means simply putting your house in a manner that makes it attractive to potential buyers. So you want to also continue to maintain your house as a homeowner. You want to keep it up to date. But as far as competing with other properties, well, you know what? To a certain extent, the tax rate helps, because with all the turning and flipping and everything else that's going on in Brooklyn, your neighbor's house being sold for a phenomenal fee, guess what? Your taxes are going to go up. So your values are going to go up. There's going to be equity. So it's all connected. It's not just one simple area. But I would just say, you know, as a homeowner, and you're living in an area that you know is experiencing gentrification, you want to maintain your property. You want it to be as attractive as others. So if and when it comes that time that you want to sell, you're in the best position to get the maximum value on your property. As far as rentals are going to be based upon the areas that you're in. The occupancy rates are going to be determining what rates are comparable at that particular area. So that's all relative. It's all changing from time to time. And now to my colleague.
Said a lot. So the property is definitely determined by the market, right? The value of the property. And so if you're looking to, it sounded like you're not looking to sell, look like you're looking to, you have current tenants and you're looking to increase rent to kind of be more level set to what the area is renting, right? So it's important that renters insurance, thank you, Garland. But what I normally do, you know, in my, I have a separate lease. I have a lease writer. And so when I first introduce an apartment to a renter, they already know there's going to be a rent increase. You know, why are you laughing, Jamal? So they, because you don't want to take people.
Garland's killing me right now. He's killing me.
You don't want to take people by surprise, right? Because then if you have a good tenant and they all of a sudden, they're like, well, I never knew we had to, you know, rent increase, but there is a rent increase every 1 or 2 years. I do. And sometimes it's a conversation, because depending on who your tenants are, right? It's like I said to you guys earlier, these are your customers, your clients. And so if they're doing what they're supposed to be doing in renting your apartment and keeping it and maintaining it, you want to make sure you have a good dialogue and letting them know that there's going to be a rent increase. And you do comparables. You speak to realtors like myself and Jeff to see what is a 2 or 3 bedroom apartment going for in that community. So then you can know more or less what your rent should be and what you want it to be in comparison to what is your market is showing as a rental. So, and gentrification is moving down the Belt Parkway. So if you're in the South Jamaica area or you're going into, it's just coming that way. So, you know, beware.
Yeah, my parents got
just a quick, if I may, just a quick tidbit on that whole issue of rental. As I mentioned, the moratorium is now ending on Saturday. And from a landlord standpoint, many landlords have been displaced in that they have tenants that have not paid. And basically they've been handcuffed by going to the courts. Now that the courts will be opening up, from a landlord standpoint, there's occupancy issues that are pertaining to evictions. So that means that if people are moving out, people are being evicted, it opens up the market for more rentals in a given area. So just be mindful that, yeah, rent increases take place, but as a homeowner, you want to make sure that you do the proper screening, because your worst nightmare is having a tenant that's not paying. And let's suppose if you're living in the basement, just as an example, but you know, that's illegal in most places. If your tenants are living on the 2nd floor and they don't want to pay rent, you have people staying in your house that don't pay rent. So that's an issue. So we always have to be careful about home ownership and renting out. Yeah, there are increases, and this whole gentrification situation is bringing more people into the neighborhood, but you want to make sure those people can afford to pay the rent for that neighborhood.
Exactly. I concur. So that's why it's important to have that dialogue with your renter. And also, as a homeowner, as a landlord, if that's the space that you're in, you want to do an annual review of your renters' income and their funds, because things change. I mean, I'm dating myself, but I had a tenant who, the MTA strike, was that in the 90s? I don't remember. Yeah. There was an MTA strike years ago. And, my tenant lost his job. He wasn't able to pay the rent. And I had a conversation, and this is before I went into the nonprofit sector, about financial counseling. And we had a conversation, and then we came to the conclusion it's time for him to go. And he owed me some money. But what I did was, which unbeknownst to him, I took him to the notary. He signed an agreement that he's going to pay me back at a certain date and time. And I asked him for a forwarding address. And when that date and time came, of course, he was like not answering his phone. And I took him to small claims court. And he gave me, I got my money back. But all of this was through a dialogue, right? And to this day, when I see him, I've seen him like recently, he's like, you were like the best landlord. You came after me with no problem. You had such good communication. I was like, yeah. So communication is key. And at the end of the day, just do your homework. Every year you should do an analysis of what your tenants, making sure that they can meet the rent to increase if you're planning to do one.
I had one more quick question. And that was, did you mention that if you're looking for a property manager, you should look at about an average of 10% of what your income is for your rental property?
Yes,
Did I misunderstand?
between 4 to 10% is usually the range. It depends on your income that you're getting from the rental property. I mean, they have variation, they have a sliding scale, so it depends on what company you work with.
Okay, thank you.
No problem.
I don't think you understand how dope it is to be a landlord, get rid of your tenant, and have them years later say, oh, you was the best landlord I have. I don't know how the hell you did that, but I need to learn, because you could write a book about that. Someone had a great question about trust. I don't know why they shy and not talking, because I believe a lot of people in our communities really don't understand how the trust works, if it could work for you. I think a lot of people just think trust is just made for millionaires and billionaires, but it could be made for middle class people. So I want to ask, if the person don't want to speak up, what are your views about having a trust to protect like your family's property or your property?
My 30-second answer to that is seek the advice of a qualified attorney that knows what they're doing to help you establish a trust. And at the law office of Andrea Gross, this is something we do all the time. My little 2 cents. Come see us if you want to establish. We'll help.
The 80 noops and they plugs, man. Y'all guys are good. Oh man.
What about my colleague? No.
Wow. So basically, we don't know whether or not it's a good thing. It's just basically if you're thinking about it, go see a state lawyer. Is that what
right.
the answer was?
But I wanted to say it's not one size fits all, right? You may have one property and think you should have a trust, or you should have a will, or it's not one. So it's unique to that person's portfolio, their real estate portfolio. And so, see, every situation is unique. See, Garland got my back. So every situation is unique, and you may not need. And then there's different types of trusts, right? So that is why, I defer to what Jeff said. You want to speak to someone that's their everyday conversation. And I did want to say everyday conversation, not a real estate attorney who does trust, rental, landlord, tenant, real estate sale. This is something that they're professionals in and have experience in.
And I feel like that's what kind of did my family in, exactly what you said. I think my grandmother went to that one person that said they did it all and went to the last minute, and I don't know if that person was trustworthy or knew what they was doing, and she lost it. So you need to have that conversation way before the fact, and develop some type of trust, do your background check. You may have You may have somebody look after what they're doing. Just don't trust an attorney because their attorney, it may make sense to have a second opinion because like I said, for most families, that is your biggest asset and you got to treat it accordingly. Can't really be that cheap on that. Garland saying again, applies to insurance. Your agent needs to know when the property is put into trust. You know what, Garland? We just need you to start talking today. We're going to forget about the 27th and we're going to have you talk. Listen, guys, all right, are there any other questions? I mean, you see how knowledgeable those people are. Can you explain what tax liens are? Anybody want to explain that?
Great question. Basically, a tax lien can be placed on your property when you don't pay your taxes. It's real simple. Sometimes a person can actually lose their property if they haven't paid the property taxes on their property. There's a multiple of listings of people that are in pre-foreclosure, that are on the verge of possibly losing their property due to tax liens. So it's a big part of the business for people that are not paying. From an investment standpoint, I could buy somebody's tax lien and I basically have access to that property within a certain amount of time. But that's just a short story on tax liens.
Right, just real estate. So, it's property taxes. And so when you're purchasing a home, you have what they call PITI, now? But, principal taxes, interest and insurance. And so property taxes trump all of them because you're paying out to the city. And so at the end of the day, if you don't, it happens a lot to seniors who do not have a mortgage on their property. And so they forget, oh, I have to pay my taxes, which you pay quarterly, or they have to pay their insurance, which they pay sometimes annually or monthly, whichever the case may be. And so they forget about it. And so now they're building up these taxes and they get a lien on their home. And someone can actually, like Jeff said, just purchase your home just off of your taxes and you will no longer, you have to pay, sometimes you have to pay them. But in New York, so that it's really hard to get a tax lien in New York because New York has protected their homeowners. They have a lot of different programs to help, especially like water liens, utility bills. They are, utility companies. They have programs where you can pay back the taxing, and sometimes I think at 0% interest. So just wanted to share that.
Well, the homeowner always has first right of refusal when it comes to paying their tax lien. They have the right to pay it before someone else can take it.
Thank you for adding that. I missed that part.
Man, y'all work too well as a team. I want to see y'all disagree on something. Just to make it a little more spicier. Dad, B got a lot of questions. Maybe not in New York State. Yeah, not playing around. But I heard that you could actually be paid by the government to develop land. Can anybody answer that real quick?
I mean, what was the question?
Oh, maybe this is not New York State, but I heard that you can actually be paid by the government to develop land.
I don't know. I'm not familiar with that.
Not my area.
Yeah, we gotta. He's trying to stump y'all. He wants y'all to disagree. I like that. I like the. Is New York more landlord friendly or tenant biased? Real short.
Tenant.
And Melba just kicked somebody out, and the person said thank you. So I don't know.
No, but New York, tenants have a right to free legal counsel. So that should be your answer.
My parents used to rent.
Today, you can call 311. And they'll give you information on free legal service. I'm not saying it's the best legal service because it's information. And as we mentioned, every situation is unique. So you really need to seek the advice of someone that's, once again, specializing in that area. Yes, New York is much more tenant friendly, which why for the small landlord, it's a problem. But if the big landlords create the problem for the small landlords.
They do.
Because the big landlords they don't fix the buildings, they don't maintain them. And you have people that are paying rent and not receiving the services that they deserve. Where a homeowner with a hardworking house to maintain and tenants not paying is a whole different scenario. So every situation is different. But they always look out for the tenant first.
Now, Jeff, were you able to talk about the bill real quick because we're about to end? Did you?
Yeah, as a matter of fact, I just wanted to mention, like I said, it's called the Foreclosure Prevention Abuse Bill. It seeks an opportunity to make a more level playing field when it comes to dealing with banks. Right now, banks are in a position where they take advantage of homeowners. And it's really not a fair situation, which is why, like I said, this legislation is out there. The objective is to make sure that the foreclosure laws are enforced, that banks can't restart the process. Just to give you a quick example, I'm not going to get too involved, but let's suppose that you had been in a foreclosure situation. The statute of limitations is about to expire, and the crafty banks find a way to restart that process all over again. It's not fair. People can lose their homes. So we want to make sure everything is on a level playing field. And that's why my office has been instrumental in promoting this bill. Like I said, it's with elected officials, it's with the churches, people in the community. I want everybody to ask their local elected official, what can I do to make sure that this bill is passed to protect homeowners' rights, to make sure they're not left in the dark and lose their homes due to some extension of the statute of limitations that's not right.
You know what? God bless your office, because I went in the website and you can clearly see that your guys truly care in your office. Some law offices, may treat their clients and people around them as invoices, but you can see, like, you really want to make sure your clients are good, the community's good. So guys, y'all gotta really look into his office. Can you say the website again for the lawsuit? The website for your office.
Oh, actually, well, it's the law office of Andrea Gross. AG Law Offices is on Instagram, we're on Facebook. We are located at 20547 Linden Boulevard at the corner of Francis Lewis and Linden. We've been here only 17 years.
Only.
We are a stalwart in the neighborhood, making difference to Andrea Gross. We always say, have you spoken to Andrea? If you haven't, you need to. We are people in the community. We are for the community. We are advocating for the betterment of everyone in the community. We want people to have own ownership, but we also people want to be able to have a fresh start. If they're at that point when that dream has become a nightmare, as I mentioned earlier, we're in a position to help you. We want to make sure you get a fresh start, or that you keep your home if it's possible. And if you have to, then as realtors, of course, we're going to help you sell it, and we're going to help you get a fresh start.
Dang, I need to work on my elevator pitch, because that was off the hook.
I'm going to defer to Edward for a second. Fresh start. When I worked in the Community Development Corporation, that was our elevator pitch. Fresh start. We had a fresh start program, no matter where you were coming in. So I definitely, I love that. We had a Fresh Start Home Resource Expo every year, because it was important for someone maybe who's looking to purchase a home, or someone who's looking to keep their home, have a fresh start in this homeownership process. So I love it. Just resonated for me, and I think that's important.
Did you mention Edward again? You sure Edward exists? You keep on mentioning Edward. What's going on, man?
You don't see? He's very.
I exist.
This one is
He's like the voice of God.
It's good to see you, because I just wanted to make sure she wasn't just making up somebody. Yeah, man.
He's legit. He's definitely legit.
We're just joking, brother.
We think about our office. We've taken on an additional role. We tend to partnership with other people. Our associate broker, Mr. Dale Davis, has become a solar expert. So for people that are looking to save on energy, that might be interested in having their homes converted to solar energy, also reach out to us, because it's a growing area here in Southeast Queens, out in the island. It's become one of the areas where homeownership can benefit by having solar in their house, if the situation's right. Every situation is different, but I just want to give him a plug. Dale Davis, a solar expert, associate broker, New York Estates Group Realty.
Before we get a Melba pitch, because I know she's gonna be, on point. I want to be a good brother, and Pierre say he has one question for his kids. Pierre has to be quick. Presenters do it quick. Yeah.
No doubt. Yeah, I got 4 bushels on this line, so I guess I get the prize for the most that came on this Zoom. That's number one. Number two, my 2 kids are millennials. They're probably the youngest ones on this Zoom call. And I think what they may be interested in knowing is, because they're too shy to post or what have you, is what would you recommend be the first type of property that they would purchase as a young person in their 20s?
I would say in my early 20s. No, I look like I'm in my 20s. Purchase a multifamily home. I mean, that was what was helpful for me. But before you do that, which I don't know if you guys were on the call with me, Jeff and I both concurred that it's important to get educated about it, because once you're bringing in other members, other people into the property, you want to make sure that you are strong in your management skills and being able to manage people, right? Because that's what you're doing, and making sure that you're good with operating the expenses if you don't have the support of a property management company. But to me, house hacking your first property, you're living there and you're renting it out to somebody else. I mean, you're renting out another apartment to someone else. That's the best experience. And from there, I decided, then I'm like, I gotta live by myself, because tenants was fun, but it wasn't that much fun. So, then you got a taste of it. Now, some people may disagree and say, you know what, get yourself a condo or co-op, because your maintenance, you don't have to worry about maintenance as much. And sometimes condos and co-ops are less expensive, co-ops are more or less expensive than an actual home purchase. But depending on your bandwidth of skill set, you can go to a multifamily home or get the co-op. At least you're now starting that step into home ownership.
I would just say also to make sure that you've done your homework, that your credit is up to date, that you've established enough money for down payment. Education is everything. You don't want to get into investing in real estate if you don't have the proper resources. You need the foundation financially to be able to put a certain amount of money down. You need to make sure that your credit's in place. You don't want to defer by making large purchases if you're considering buying real estate, because trust me, when you're going to a lender, you're trying to obtain a loan, they're going to look at everything. All of your purchases, your credit, your history, your employment. You got to make sure everything is in place before you attempt to want to buy property. Someone mentioned something about Jersey. I saw this on the chat, just to add real quick. Well, Jersey is less expensive than New York. Every situation is different.
But just to add to that, I'm part of Keller Williams, and it's a national company. So if you're looking for an agent in New Jersey, I can always refer you to someone in New Jersey that I will personally interview before they speak to you, so that we're sure that we're on the same page in regards to their service for you. So that's something I can offer as national company.
Oh.
I wanted to say something back to Jeff. I know, Jamal, we got to go.
Yeah, talk your talk. Wow, I saw how you talk your talk. Keep on going.
Risk tolerance is also important when you're purchasing a home, because, a lot of people, even not someone, Pierre, a young millennial looking to purchase a home, but anyone, a lot of people say, well, I want to buy a multifamily home because I'm going to get rental income and it's going to help pay my mortgage. It's all about your risk tolerance. How much can you really manage someone, when, my first home was a very big experience. I was, grateful enough that I inherited my first home. It was a multifamily home at the age of 23. And then I left my mom's house to go to my own home, which was the one I lived in the basement. But my first 6 months of my house experience was the water main broke. And if anyone knows, if they're a homeowner, what a water main break is like, it's not like $5,000, $5, like $5,000 to $10,000. And so having that cash at reserve was very important, even though I didn't have it, but it was very important to have. And it's not something a home inspector would have found. I had a home inspector. He couldn't find, he can't find a water main break because it happens from the street, which requires you to open up the street and have the city and permits, all these different things come up in that. So it's just I could have folded and went back to my mom's house and be like, okay, Mom, we gotta sell this house. I can't do this. But it made me stronger and made me a better landlord. And I got some education around it and was like, okay, I can do this. So it's just also thinking about your risk tolerance, no matter what age you're in purchasing a home or looking to be a landlord.
Shout out to Ariel for being the niece of the year by giving props to her uncle, because the uncle is definitely doing this thing with the questions. Pierre, so shout out to you and your family. Melba, definitely say how you can help them, how to find you.
I'm everywhere. No, I'm just messing with you. No, I'm not in Queens. I am in Manhasset. I do live in Queens, but you can find me on Facebook. Yes, so you may see it says in Melba Martinez. Edward may know. I'm back to Edward. I just have a thing with my married name is Melba Rodriguez. So if you're looking on Facebook, you'll find me on Melba Rodriguez. But if you're looking on IG or LinkedIn as well, you'll find it Melba Martinez. And I'd like everyone to just come to my Facebook page, For the Love of Real Estate with an S. And I share information there all the time. And I know you're gonna give out my contact information. I'm always open to a text message and have an opportunity to do some buyer consultation or seller's consultation to kind of dig in a little bit deeper as to what your real estate goals are.
Yeah, I mean, I want to thank both presenters for doing an absolute great job. I think people really enjoyed your presentation. You kept it real, simplistic, and just know, everybody, if I ask a presenter to come on, I guarantee you can trust them. So please do not take it lightly that they're telling you about their newsletter, their Facebook, because I see the information that they give on a daily basis, and the community needs to, read this and communicate with them. If she said that you can email her, freaking email her. Don't be shy, make it happen. But listen, we want to thank the sponsors, Queens alumni of Kappa Alpha Psi Fraternity Corp. Wait, is Garland saying more stuff? Kappa Alpha Psi Fraternity Incorporated, my tax company, JS Tax Corp, and Boyd. As you can see, Boyd is very active in the chat. Next week it's gonna be me. It's gonna be game time. We're gonna learn about taxes. Trust me. I'm not gonna make taxes boring, but please come with questions, because I will haze you and say why you are quiet and not asking me questions. So if you ever want an honest tax question, next week is the time to get it. Trust me on that. Yeah, I could put money on that. And I'm gonna get to you, Jeff. And Garland Boyd, if you don't see right now that this guy got too much information in that head of his that he's just waiting just to I don't know what else I could do with y'all guys. So if y'all didn't RSVP for Garland Boyd's thing on the 27th, just do it now. Do yourself a favor, tell your family and friends, because he's gonna come with a pencil, a pad. It's gonna be off the hook. Jeff, what would we like to say, bro?
Well, before we close, I just want to say first and foremost, thank you for giving us this opportunity to share our resources and what we do in real estate. My colleague and I are certainly excited about this business. We love real estate, I can tell. And just a foreclosure pitch, if you're in trouble and you need help, don't walk, run to my office. The banks are opening up, the courts are opening up. If you're in trouble, you need to run to our office. We can help you. In terms of real estate, yes, we're multifaceted. We have many different connections that we can offer. And so please consider us. And thank you very much.
I want to give a shout out to
Brooklyn.
CK.
Oh, no.
No, CK, another Kappa that I know.
You sure CK exists? Because I don't know about you. Nah, he's a fellow tall noob. I know about CK. Garland's still doing chatting. Say CK is a fellow tall noob.
I'm here, man. Shout out to Hofstra. All right,
Exactly.
Melba, go ahead, do your thing. Listen, this was an excellent program. I'm not giving closing remarks. I'm just saying this is an excellent program. I had a question, but I know that you're over time, so I'll ask it on the side. But this is an excellent program. Thank you so much for the three of y'all for putting it on. Go Noops.
And in closing, I just want to say Noopski to my colleague. May you
Yes.
continue to be blessed and
Thank
success and all the best in 22 going forward. And I'm just a phone call away. Maybe we can collaborate, do some money, make some money together.
Exactly.
I'm not going to compete with their closing line. So all I'm going to say is good night. Enjoy your families, and God willing, I'll see you next week. All right, everybody.
Bye.